Welcome to the Options Weekly Forecast Live, where we give you the best options trades for the week ahead. Today is September 11th, 2023. We'll be looking at the whole week ahead, making sure that we have the best options trades on the market ready, locked, and loaded for the week. We walked through a couple of trades from last week. We will then also play everyone's favorite game of Smash or Pass, where you tell me what charts you want to see, and we talk about very quickly whether or not it's time to go long, and we look at the chart just to make it that much easier for you. So make sure that you bookmark this. We're here every Monday at 4 o'clock Central, 5 o'clock Eastern. Sorry for the delay today. I was in the zone looking through some stuff. And do we have some stuff to run through here? As always, say hello in the chats. Let me know if you're from the Discord or if you found us on YouTube. Let us know. We're going to be giving away some free stuff today, as always. And you need to follow this link below if you're not in the Discord. We do a lot of wonderful free live streams, live trading education, live trade alerts, tons of research, everything you need. If you're working a 9-to-5 and you need to get your trades in, but you don't have time to do the research, we do it for you. So going into it, we have the SPY on the chart here. We're going to make that a little bit bigger for you. We're going to pound this out nice, quick, and efficient to make sure everybody gets on with their lives, because I want you to be able to take this, digest it, and be on your way. So SPY green today on very, very, very – oh, that's a weekly. Give me a second. So we're going to hide this. But volume was low, so I was correct. So we did have low volume today, but we did have positive price action. So what does that mean? Well, it means that the price action is positive, but given that the volume was a little bit thin, it means that we shouldn't necessarily trust this move as a longer-term indication of trend. However, we did end up green. We had a little moving average touch there. We've identified this line, as you can see on my chart, 446.78, as our functional pivot point of support that we need to hold for this to continue to upside. And if we do, I think we're going to head back to 450, and then we're going to eventually retest 453. If we break that, then 460 should be our next target on the swing. So looking at how the SPY opened today, a little bit red, a little low, and then it resurged through the rest of the day. Tech seemed to follow and do the same. So make sure that when you're looking at these charts, when you wake up, I suggest 5 minutes, just check general markets, see how everything's going, so that you can monitor your trades and make sure that for those of you that are just taking these longer term swing trades, that you have a somewhat of a pulse on the market so that you don't get beat to death on a really red day. So looking at this, we opened a little weak and then we pushed back up. We're going to go look at how the day panned out overall on the hourly chart here. We pushed up to a high of 448.77. We sold off to a low of 446.5, and then we pushed back up. So if we look at yesterday's price action, Friday, we hit resistance. We hit our head at about 446.78, and then remember, we on our live day trading session, we took our day trades here, and we played this move all the way back up through close. We saw a lot of strength forming there, and we decided to take that trade and take that bet and go right along with it. So today we saw a continuation of this trend, which is moving above this horizontal support line. Remember, you don't need 1,000 lines on your chart to be good at this. You just need a couple of horizontal lines to tell you the range, and you could trade from there. So we traded up to a high of, like I said, about 448 3/4. That seems to be about where we topped off on this last big push up, which tells us that if we can stay above 448, we very much so can see the upside of 450 plus, which means if we open strong tomorrow, 450 calls 2 weeks out should be on your radar. We're going to go ahead and pull up the SPY on the options chart here to take a quick look. I think if we're looking at about 2 weeks out, to be realistic here, we'd be looking at about September, let's see, maybe September 25th. That gives 2 weeks exactly. So that would be expiry on Monday. Actually, let's go back to the 22nd. That'll be a Friday expiry. That's what we want. So I would be looking at the 451 or so. Those should be at about $2 right now. I'm going to go ahead and add that to the watch list. Where's that? Oh, 207. I'm going to add those to the watch list to imagine that we took these as a swing, right? So should we open strong here? We looked at the 451 calls dated for September. Let me go back and get that date. The 451 calls dated September 20. Is it 3rd? Hold on. Wow, our firm calls boom today. So we were looking at the September 22nd 451 calls. That is the contract I would look at specifically for 451 call, 9. Type that in the chat for you guys. That is the specific contract I'm going to be looking at here at open if we open strong. So remember, what we want to see, and this is the expected move that I'm kind of waiting for. If we open kind of strong, we should come down and probably test right around here and then push back up. So we should come down and test about 450, 458, maybe a little below 458. And if that happens, that would be the opportunity to make that purchase on those calls. Ideally, they come down a little bit. So that means you would potentially be buying in on those calls. I don't know, somewhere around $1.75. And then those obviously can be swung back up to, they went as high as $4 back September 5th. Now, theta decay has kicked in, but these do look like they're ready to curl back up and have a nice little ride. I would say I would look for about $2.50 on as a reasonable target. Call it 20% to be safe. That puts you at about 240. But even 10% on a swing is worth it. So keep that in mind. So that's kind of the move I'm expecting. If we do break lower than here, then we're probably going to come back down and test 446 and a half, 446 and 3/4, at which point 447 puts will do you justice there, same expiration. So in our bull scenario, we're looking at 451 call, 922. And then in our bear scenario, we're looking at the 447 puts, 922, just about the same expiration. I think that's a very realistic play for us to take. Those are your two options, your two scenarios that should treat you very handsomely. And if we look and extend these trend lines here, very simply put, that should put us right around that 447 and 3/4 that we were talking about. So that's your take on the SPY. Again, quick, easy. Now you know. That's what I'd be trading. You could trade those contracts that are mentioned. You can see right below my face as a swing trade and or day trade. I think that those will move quite nicely if we do get that push down and then resurgence back up. That should be a nice play. So shifting over to the Qs here, we saw even more strength than we saw in the SPY. This thing is trending up nicely. Let's identify that channel there. Let's just be quick with it. Again, technical analysis is great and all, but if you don't have a trading plan, it's worthless. So that's the trend channel that I really like here. I think we pushed above it on Friday, and then we tested it resistance at open, and then we did push above it towards the end of day. So remember, this one gapped up and opened a lot more strongly than the SPY did. And if we take a step back and look at the daily, we can see the same thing, that we did open a little bit stronger than we did on the SPY. RSI low of 51 as we tested 370. We did take that bull put spread on the Qs, which made stupid money. I'm going to put that in the chat. Make sure you take profit from our last stream. That bull put credit spread up 30%. Plus, that was a take profit trade today. That was our bull put spread from last Friday. We took on the live stream. Absolute banger, easy overnight swing from Friday to Monday. We made 30%. So, for example, if you sold 5 contracts and you got $1,000 in your account for doing so, right? You made $300 for holding a trade for less than, business hours, for holding a trade less than 8 hours. So that's basically a $300 over 8 hours. You made almost what, $50, $40 an hour. Phenomenal return for your capital just sitting there. Realistically, it took you less than 15 minutes to execute that trade. So $300 over 15 minutes, I'd like to think that's $1,200 an hour. So you crushed it. You made money. Congratulations. You're the best. You're the smartest. You're the sexiest. And I'm proud of you. I'm saying that to myself. Just kidding. I'm saying that to you too. So those are our indices. We're going to take a look at a couple high-flying names that have been on everybody's radar this week. Right now, we have SAVA on the chart. This one is one of my favorites, one of my biggest trades ever. This trade made me almost $40,000 the last time we took it. We alerted this in our Discord, free to everyone, at about $2 or $3. It continued to run to about 137 at the high, 146, excuse me. So that trade was thousands of percent, absolute banger. But coming back into the here and now and where we are today, SAVA's been trading down quite a bit. On the weekly, it looks pretty weak. What we really need to see is support to hold here at about $20. If it does, then watch for retest to 27. Above 27, that's your pivot point, and then head back to 95. That would be best case scenario. So that's what I want to see on SAVA. I know a few of you have been asking, so I wanted to make sure that you guys knew exactly what I was looking at. We talked Zoom last week, guys, on our live stream Friday, our live trading session. We talked Zoom. Um, Look at that RSI, absolutely coiling, just exceptional looking right now. And what did we talk about? We slowed the roll a little bit. We slowed the roll. We waited. We're going to wait. We want to see that breakout over 75 bucks, and then we are going to look at this as a long-term absolute 10-bagger money-making trade, which it will be. But we're going to wait for the pop first. We're going to take this trade as intelligently as we can, and that's, to me, is the smartest way to take it, which is to wait for that pop over 75, and then we take the swing position. Look at this RSI coiling here. It's just exceptional. This chart looks absolutely majestic right now. The daily looks even better because we have been pushing up against that resistance there. We're just waiting for a little bit more volume and a pop over 75, and then we're good to go. So once it breaks out over 75 and then shows us that test that it's going to stay up there, we're going to buy on that test, and we're going to make a stupid amount of money on this chart. That's Zoom for you. That ZM is the ticker, just so you know. So this is going to be a big money maker, I think, for us moving forward. I've also gotten some questions about NVDA. I wanted to run through that one really quick because I know that's on a lot of people's minds. We sold off today, but we did hold above support. So we're looking at that 450, 452 or so. We have that marked by this blue horizontal line. That's kind of what we're watching as our functioning pivot point. If we do break below there and close below there, then I would say that this thing's coming down and we need to be very careful. If we don't, then we should be good to go and we should be happy with the gains that we've had, and then we move on. But as long as we hold above here, I'd say I'm looking for continuation. Again, we're up over, I don't know, 1,800% on the options trade on NVIDIA. So stupid money's been on the table. Make sure that you don't give a bunch of it back because you shouldn't. You don't owe it to anyone, and you just don't want to be in that position. You don't want to give that away. So I would suggest that you don't. So looking even further into the market, we look at Shopify, another one of our great trades, absolutely booming right now. Again, we alerted this equities at $30. It is well beyond double that right now. Tested its high 71.43. And if you guys look, it is maintaining our upper trend channel. It did not stay in the lower trend channel, thank God. We got a huge gap up on the 31st, and we have held up nicely there. What we're waiting for on this trade for the next leg is to break out, test, and hold above 71. So, for instance, we're going to see this trade sideways, hopefully hit support, break up, and then find support there. So this is the kind of move that we want to see, a healthy move that's going to tell us that this trade's ready for continuation. So once it is ready for continuation, once we break above 71 and we hold, our next target's going to be 83, and then we're going to shoot for $100. And we're going to make stupid money on that. So we've already doubled our money on this one. Options traders that took my Shopify long-term options trade, you're up 300-400%. So keep that in mind. But the next leg of the trade is until we reach that next level. So, a lot of people ask me, well, you already took the trade and you're in it, you made money. What about right now? Right now isn't the move. There's not a much upside or downside. You're right in limbo. You don't want to take it here. It's stupid. Why would you do that? Why do you hate your money? Don't hate your money. Treat your money well. Treat it with respect and love and tenderness that it deserves. So to do that, here's what you do. You wait until it breaks this pivot point or comes down and gives you a different pivot point where you can trade downside. Those are your options, and that's how you make money. Realistically, if you want to do this long term, that's how you're going to do it. So I think this trade is a prime example of why we don't buy here, because it's just the opportunity isn't there. The upside isn't there. But should we wait until we break that new level, as I've drawn out here, this beautiful little squiggly, then our upside dramatically increases because our downside is fixed. We know at that point, if it breaks above here and it doesn't hold 71.36 as support, then we could just set our stops just below that. We lose a few bucks, but we don't lose a lot. And then if it goes to the upside, we made a killing and we win and we're the best. And that's how you should trade all the time. You have to know what your edge is. If you don't have an edge, I'm going to go bigger so I can say this. If you don't have a trading edge, then you have absolutely no business doing this. I'm just be honest with you. If you don't have a plan and a trading edge that gives you a statistical advantage over the rest of the market, then you're just throwing good money after bad. If you don't know what yours is or you want to learn how to develop it, I'll show you how to do that. We'll show you how to do that. The link is below, discord.gg/Pennybois. We teach it all day, every day. You have to have that edge, because that edge is what sets you apart from the retail schmuck that's losing their money every week and, the hedge fund guy that has inside information. You have to have some sort of edge, which is basically a system, a rule to live by that is always leaning in your favor, meaning if you follow that trading edge, you will be profitable more than you are not, which means you are net positive overall. Look at it on a monthly or weekly basis. If you maintain that trading edge and you continue to crush your trades and you found a formula that works perfectly, like I have, right? My long-term options leaps, that formula works very well. And it's made me this year, one of what, 80, 90. I bought the car I bought because of that NVIDIA trade. It made that trade alone was like 50, 60 grand. I took right off the top, and I'm still holding roughly 40,000 in profit from one trade. That was a $2,000 position. Now that's not the norm. That was a banger. But because I know what my edge is, because I know what my risk is, I can afford to take those trades, even if the upside and risk are higher. I can afford to take those trades efficiently, week in, week out, not once in a while. Because the thing is, if you haven't identified an edge that's consistent, then you have no edge at all. Because by definition, it has to be consistent. It has to roll with you through market conditions, through trading styles. You have to be able to roll that through. If you can't, then you will not be consistently successful, which means you won't actually make it doing this. I would argue that trading is a game of survival more than anything else. Those that can outlive and outlast will thrive in the long run, because it takes sometimes 20, 30,000 in losses to get your head right to make $100,000 in gains that make you laugh at those losses in the long run, right? So I've talked to a lot of you about my Zoom trade. I lost $38,600 something dollars on one trade in like less than 3 hours, or even less than that, realistically. Did I quit? No. I realized that what I did there was incredibly stupid and reckless, and I need not do that ever again. And it actually pushed me into the strategy that I use now, which has been consistently profitable, that is well defined, that is well outlined, that has a fixed risk reward on every trade. Every single one of my trades has to fit in that edge, or it's not my trade and I shouldn't be taking it. If you violate those rules, you will not make it in the long run. And I know a lot of you just want to make it in the long run. You just want to make money doing this. This is how you do it. Coming from someone who has made money doing this. And I'm sure anybody else in this chat will tell you the same if they've made money doing this. If you can find a wash, rinse, repeat formula, which will help you find, no problem, you can do this for the rest of your life and have an ATM machine installed in your living room, and you will win. While every one of your friends is fighting inflation and realizing that their $100,000 paycheck isn't what it used to be, you're taking that cash, you make it work, you're bringing it home, and you're putting that cash back to work for you, and you're making money. So for those of you that don't know how to do it, again, links below, free Discord. Don't join the premium stuff. Just try the free stuff, make it work. And then once you make some money, make sure you get into the education course. It's 90 days. It's like a damn college. It's phenomenal. We'll teach you everything you need to know, from market psychology to technical analysis to trading strategies. It'll do it. It's all of it. It's everything you need. So to get back into these charts here, my friends, and I want you guys to start putting those tickers in the chat for smash or pass, the ones that you want to see, the ones that you want to cover. I want you to put those in the chat to make sure that you guys are getting what you need, because at the end of the day, the stream is for you. I don't do it for myself. So if you guys aren't getting what you need out of this stream, then that's on you. Drop those tickers in the chat. We'll play that quick game of smash or pass, and we will basically move through those charts as fast as we can. Again, we're just looking at long bias to make sure, is this chart good to lock and load on shares right now? We're not looking at short. We're not looking at anything else. Very simple strategy. Is it the right time to buy and hold this stock? That's what we're going to look at. So start dropping those in the chat. Give me just 1 second. All right, let's get into it. So let us throw together our top two picks for the watch list, one of which we've already covered a little bit on our Friday stream, and that is PayPal. This chart is starting to shape up to be something interesting. To me personally, it is not there yet, but it is getting closer. And it's one that I think everybody should absolutely have on their watch list because it is one that is going to either break out or it is going to crater to oblivion. So again, pull this up on your chart. I hope that you guys have this up alongside the stream. It's PYPL, that's PayPal. And we're going to look to see if my specific trading edge, the one that I've used for those 1,800% gains on NVIDIA and all these other huge trades, will apply to this one. Because I think walking you through it step by step will make this a lot easier to understand. So for those of you that know me, you know that I like to keep the analysis very, very simple, as it should be. We should create these horizontal channels using two lines. If you're using Webull, you just select horizontal line and you find your areas of price resistance and your price support, and you place those lines there. Easy as that. So with this one, we've already done that. And looking at PayPal right now on the daily chart, which means each candle is 1 day, we can see that it's sold off as low as 57.29. It was trading way above that. If you guys remember, for those of you trading during those wonderful COVID times of just free money across the trading sphere, this is trading up to almost $300 a share. And now we're here. So what do we do with it? Well, there are a few opportunities here for PayPal. And one of them involves buying shares and holding them for a few years and making basically triple or quadruple your money, in my opinion. So basically what I'm looking at here is I'm looking for PayPal to no longer violate any lows below 57.29. So that's rule number one that we need to see happen here. We need to see this stay above $58, give or take, 57.29 to be exact. We need to see it stay above that price. As long as it does, we then need to see it climb above $63, which puts it into this channel right here. So I'm going to draw it out to keep it simple. So we need it to come up into this channel right here. Once it gets into that channel, then it's like, okay, we're talking here. Let's talk about a buy. Let's make sure that this is the right opportunity, and let's see if this is going to work for us long term. Okay. Once we have that, then we know, okay, we're here. We can trade this thing to $70. Easy trade, make a nice 10%, be on our way, right? And then what's our next path of resistance, right? Well, it's this 200-day exponential moving average, EMA, right? This 200-day, which is this yellow line right here. That is your big, that is the ceiling that this thing needs to break through before it has any before it has any notable upside that's going to make you rich, right? So step one, we do not want to see it go any lower than 57.29. Step two, we need to see it climb as high as 63 into this horizontal price channel we've identified right here. Step four, we need to see it break above $69.25. Then our final step, five, we need to see it trade and break above about $75. When PayPal is consistently trading above $75, this thing's going back to 100. You can save this stream and call me an idiot if I'm wrong, but I'm telling you, if PayPal breaks out above 75 and holds, it's going back to $100. So that's your bullish opportunity that I think everyone should have on their watch list. Everyone should be paying attention to. Here's the bearish outcome, which I hope doesn't happen, right? Because I do have shares of this in my long-term account. If we break below 57.29 and we can't hold up at $50.61, I think that PayPal has a long way down. In which case, you go short and you just hold it until it reverses, or sell your shares and run the hell away. Because realistically, remember, this thing was trading down to about $30 post IPO, which means we could probably fall as low as $40 a share. You don't want to see that. So those are our two scenarios. Save this video so that you can refer back to this and understand what the price levels are. I really hope you do, because that's going to help you exponentially as you execute the trade and we walk through what levels it needs to hit. That is number one on the watch list. And number two, Mr. Mike Porter already put it on there, is DoorDash. I think DoorDash has done a great job capturing their segment of the market. This is one I'm still holding long term from our initial pick and our buys at like 50, 60, 70 bucks. I got to get rid of this. Sorry. So it IPO'd at about 194 share, went to 257, came as low as 431.37, which makes this pretty brutal chart. But if we go to the daily and we look at it as it stands, right, we see something very, very interesting here, right? It has maintained strength along this trend line, which tells us that we are absolutely going to, if we continue, head back to about 113 a share, right? So this is going to continue to be a wedge. Once we hit about 113, I think that's our opportunity to really break out to the upside, where we really start talking about 150, 180 as our price targets. As long as it holds up on the daily above there, I think we're good to go. I hate when it changes these. Now on the weekly, something to consider. We do have that functional resistance right there at about 113 or so, right? This 200-day EMA is swooping down. That is going to be where we bump our head. So that's our ceiling, right? Our floor is at about 75 a share. So just to reiterate, 75 is the floor, 113 is the ceiling. We need to break through that ceiling until it becomes our new floor, right? So that's how support and resistance work. It's a very simple concept. Don't let anyone confuse you and make it overcomplicated. So this is the other one I'm watching, and I think the daily chart does it the most justice. That very realistically, could we see 113? Yes. What happens after that? Well, in the past, we came down to about 113 and we held, and then we traded as high as 257. So long term, I think that's realistic to where you could park your money, sit and watch. They've captured great market share. They're very focused on being a deliverable product, or sorry, being a very functional product focused on delivery of food, grocery, etc. only. Uber Eats, Uber is great, but I just feel like a company that focuses on doing one thing and being the best at it has the best chance to capture more market share and inevitably growth. And the way they've built themselves into society just makes it kind of an immovable object. Not saying I love the model or agree with it, but at this point, it is now an immovable object that we are not going to get rid of or see anytime. We're not going to see it rid in the market anytime soon. So those are your two must-have trades that I think have immense long-term potential that carry risk, right? But we've defined the risk. So there's no chance of losing your whole account in this, right? You don't want to put your whole account into anything because we've already outlined exactly what the risks are and we know what the upside is. So these both fit into my trading edge strategy that I discussed earlier. They fit into my risk reward profile discussed earlier, and they offer what I need for this to make sense as a good trade based on what I outlined. So again, save this video so that you can come back and refer to it every time you see this tick up on the chart or come down. If you save the video, you can come back and say, okay, that's the price level he's talking about. I don't need to worry. This is fine. So now we are going to play quick game, everyone's favorite, Smash a Pass. Please drop your tickers in the chat. All I ask is that you drop one per comment, but you could do 3 per person. So drop those tickers in the chat, just one at a time per comment so that I can put them on the screen for everybody, guys. All right. Hope you guys got those in the chat because I'm going to start going through them. So we already went through Zoom and video. We already did a couple of those, so we're going to keep moving. We got Hari Devi. What's going on, my friend? Woody got Woody up on there. I like that. Oh, it's well said. That's not a ticker, but you did drop one RTX. Okay, let's take a quick look. Again, we're just looking to see if there's an opportunity to go long. I'm going to tell you right off the bat, no, thanks. So this one right here looks like it's falling abysmally. Sell volume was immense. I don't even know what this company is, but it looks like they're facing a massive sell-off. Trading below the EMAs. It's gapped down once. It's gapped down again. It looks like I've already charted this one out, and I mapped out $70 as the opportunity to load up a long position. So I would say follow that. I'm going to, unfortunately, give this one pass. See at 70 because it just looks like it's absolutely abysmal from here. Volume was so crazy here on the sell side after earnings that I just don't feel confident saying go long now. I'd say so there's a pass for now. Let's get into it. The Doku Roblox, yes. Very interesting company. This one I do actually think is in a decent position to buy, given that they have sold off and we're trading at a more of a fair value than I think they were before. So just mapping out a nice little horizontal support there. It looks like we're trying to form a nice little W bottom bounce, or that M pattern you guys always talk about. at about 26. So let's call 26 bottom, and let's say right now I think there is opportunity to start loading up here with 25.32 as your low. Again, remember, this was a previous low. If that gets violated, we're done, we're out. So this gives you a nice trade where you're taking, say, 10% risk for 30% upside. Nice 1 to 3. So the Roblox, baby, there you go. I think that one is definitely smashed. Got the hip set dip. Just smash it with protection, baby. Make sure you set that stop. I think that there is the opportunity to go long here. They're leveraging AI. They're allowing users to create worlds that then they promote and market for their own benefit, which also benefits Roblox. I think any kind of creator economy type of businesses are going to thrive, especially those with a very vehement following like Roblox has. And honestly, I want to say what they have hundreds of millions 100 million plus players monthly, I would assume. I don't know, don't quote me on those numbers, but I would assume that their numbers are rival Fortnite and any of those other massive games. So I think they've done a great job creating an economy within their ecosystem of their game, and I think they'll just continue to thrive as they leverage AI to help more people build more worlds that are more complicated with more ease. So look at like what WordPress did for website and web design. I think if they can leverage AI in the right way and create a builder, they can make world building a lot easier for creators who then want to build in-game worlds. Think metaverse, but something that's practical and applicable to everyday life, that actually can be transacted in right here and right now through the ecosystem of PS5, PC, Xbox, etc. Take a look at AMD. I believe we already smashed hard on this one, but oh, had a bit of a day there. Look at that. Our analysis was on point, touched just the bottom of our range there, right? So we had outlined this range on our stream right at about 103. I was just above. So it touched down just above our range to about right at 103.20. Remember, this range scares me a little bit, but as we head towards this point of confluence, right, where they meet, I think that we're going to start to see some volume. Hopefully, I would love to see this trade sideways. Honest to God, I'd love to see AMD trade sideways until mid next year and then have an explosive run, because then that run will be sustained. If it continues at this pace now, it's just going to be a lot of volatility, which you don't necessarily want to see all the time. But it looks like it's heading towards trend strength right around 100, 102. Let's watch this one play out. I would say right now it's not a smash or a pass. It's a tender. It's just not tender enough. Which I know that's contrary to the game because everybody wants an outcome. But this one, I don't want to go either way because this is a great company to go long on. I hold a number of shares of this in my long-term account, but for the sake of the exercise of saying, is it time to go long now? You know what? Yep, screw that. I can't give you that half. What is that? Can't give you half-ass answer. Smash, baby. Come on. So it's a smash because he's cute, but you got to hold me above 102. You got to stay there. So you want to keep this above 102, and it's ready to rock, ready to go, ready to you know what, baby. Up to 113, and then I'd say our next target we're going to be looking at 117, and then past that, definitely upside to 130. But definitely a company in an industry that's going to continue to see growth here. I wouldn't have any concern over this long term. Off the high of 164 back in 2021, so definitely upside here, and it actually looks to me, if we go to the weekly, I wouldn't mind seeing a nice little inverted head and shoulders pan out there. You know what I mean? Nice little head here, shoulder, head, shoulder down to like 75, 80 bucks, maybe even around the mid 80s. I would love to see that. I think that'd be a great opportunity to scoop. I think that would be absolutely fantastic. So, yeah, AMD's gonna get it, baby. I can't give you that. I'm sorry. I apologize for even giving you that half-ass answer to begin with. That was embarrassing. All right, let's take a look. 9. Oh, likey this. So it looks like this one's definitely low float. I remember this huge push, up to 17 plus. Sell off, consolidate around 280. RSI is consolidating. That's nice. See how it's tight. It's tightening. It's coiling. Low volume though. So this one is going to be tough because of the volume. But I would say that this one over $4 is a pretty good. Oh, sorry. This one over $4 is a good deal. The problem is just trading too high above that to say take an entry. Sorry. Whoa, was that 3? No, it's not where I wanted it. Where did I originally have it off the highs? There. So you can see here to give you a clearer picture. It broke out and it tested on support. So I would say that as long as it holds up above the support 376, I'd say this thing would get a smash from me, but not in the traditional sense. I would say this one is actually, you know what? I'm gonna say look, it's a pass. Unfortunately, it's sexy, but I'm busy right now. It's just too much risk, right? So like as a breakout day trade candidate over 5, aim for 650, done and done, easy trade. It's done that like 5 times. Look at that, boom, over 5. Let's see, over 5, boom, 650. Let's look for another time. It did that 1, 2, 3 times, 4 times. So I would say, oh no, 5 times even right here. It held over 5. 650. So I'd say you could ride this from some $5 to 650 day trade all day, but for the sake of smash and pass going long, you just don't make the cut, baby. But I hope you come back next year. Keep on coming back, and you're going to get there. Facebook user says Tesla, of course. I'd love to do some Teslonians. This one is very interesting. I do think that we're going to hit a ceiling at about 2. I think our next ceiling is about 278. If we can break through that, then we're in a great shape to really test 300. But 278 is where it's going to be. Looking at Tesla here, of course, get the smash. I think it's definitely getting the smash, but you got to be safe, baby, because at the end of the day, you got to watch that 278 break. If you don't get it, you don't get that break over 278 and hold, this thing's coming back down. It's going to retest 250s. But I do think right now we're on the trajectory to get back to about 278. That's my next target. And then I think that we're going to basically push 284 then 300. So if you look right here, 278 was the high. It was just about the high we pushed off right there back in June. Sold off, came back up, but we did have a gap up. And look at anytime Tesla gaps up, it typically has a nice move. But I'm looking at these past couple. We get a gap up, we push a little higher, and then we come back down and we find support. So for this one specifically, I'll be loading up. We push a little higher. I want to see it come back down and find that support 260 or so. And that to me is the opportunity to load up for those 300 plus calls. I really think that that's probably where this thing's going to end up, and it's going to be juicy. It's going to be delicious, and I'm going to love every second of it. Richard Burkax. Let's go ahead and look at TSM for Richard. Oh, abysmal. I'm going to tell you right now, this Taiwan semi has right now. I'll just tell you about this chart. This is a rough chart. We don't want a taste of this right now. We full right now. Look at that. If it holds at 89, okay, you're in a better spot than most charts, but or sorry, no. And if it holds 89, you're in a better spot than you are right now based on this chart. But realistically, trading below the moving average is huge sell off. This thing's very volatile. We don't know where it's going to find bottom. It looks like it has support at 86, but realistically, look, in the past, it's cratered from this same level right here. It's cratered down to $58. So I think that right now, this is not the look, it's not the move, and it's not the taste that's going to get you there. It's not going to feel nice, and you don't want any of it. So I'm going to take another look, see what else you got in here. Oh, I got to do TLRY. So right now we are up like 40, 50% on our options leaps. We absolutely crushed it. Why? Because we're the best. Let's look at what we're actually up right now on those TLRY leaps. Those $4 calls are up 58%. Absolutely beautiful. Bang, 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 bang. How did we know? That's the question you're wondering is how did you know? Well, That trade very specifically fit my protocol and my trading edge, and the risk reward was there, and it was delightful. So we took it and we crushed it. I put the link to the screenshot so you can see the proof right there. Feel free to ask any questions about it, but we absolutely boomed it. And right now I'm going to give it a hard smash because we already took it. So actually, I'm going to have to tell you right now, already smashed it down. Down for round two. I am. I'm down for round two. I like it. I need it. I want it. It's good. We're trading 337 right now. So last time we hit functional resistance 355, but look what we did right here. Once we really traversed that $360 mark and we held there, we pushed to $5. This chart has so much upside, it's not even funny. Weed business has gotten absolutely slaughtered, but this is one of the better positioned brands. So I think there's definitely opportunity here. RSI on the weekly looks exceptional, touching 65, which tells us so we have opportunity really to see like $8 here. So you heard it here first. If weed goes, TLRY to $8, baby, or close. We go to 5 and then we go to 8. So let me recap that. I'm gonna put it right here. I realize I want to stand on these with conviction. We already crushed TLRY. We're already up 60%. But mark my words, TLRY continues. We're going to see 5, then 7, and then more than likely we'll go to $8 if the weed business starts to boom. Heard it here first. You heard it here first. First. If you're not first, you're last. So moving on. Let's knock through a few more. I don't even know if you're still here, Facebook user, but I'm gonna let you pick one. My daughter says, pick one, over and over. So we already did QCOM. We were looking for the breakout, got it. Now it's selling off. So basically, this one has a descending support right now, which means I don't want any of it. So I'm gonna go ahead and say QCOM. Pictures nice. I'm gonna go ahead and pass on that Qualcomm. Picture's nice, but I might be getting catfished, and nobody wants that. Just I don't like it. So we're trading below the EMAs. I don't like descending support, even if it's holding there. I think this thing has more downside in it. Should it choose to go that way? Should the market choose to push it that way? Bigger than average sell volume as of late. We haven't seen any big buying since we were down to like $60. To me, this is kind of like it's just too much risk, not enough reward. Jay Patel, what's up, baby? How you living? Take a look at that Amazon for you. Boom, baby. Amazon with the boomstick. Thing is absolutely bumping on the daily, on the weekly. What we're looking for on Amazon here is this break above 145. So for those of you that aren't following, here's why you should be, guys. Here's why you should be. For those of you in the Discord, who recalls when I talked about this, see this black line right here, the break of 119, that was the buy. That when I told you, when we break 119, that's the buy. I already had it mapped out on the chart right here. That was the buy. You would be up what, 140? You'd be up 20 something dollars a share, right? So almost 20% there on a mega cap stock. I told you 119 breakout was the buy. So here's where we are now. We have these weird little areas that we can focus on, right, where we gap down. And I think those are really going to provide kind of the answer to continued price action. And I would call this 136.97, that right there. I'm going to scoot this up. I think that's going to really function as our pivot point there to tell us whether or not we're going up or down. So as long as we're over that, I'm going to say, let's ride, baby. Let's get that 160. Let's get a taste. I'm going to say Amazon, Jeff Bezos, ripped. Yes, please. Smash. Jeffrey Bezos, what are you doing right now? I really do. I wish I had like a Jeff Bezos tracker that would just tell me what he was up to, like what kind of thoughts. Oh my God, I would kill to see his Google is. Can you imagine if you could just see in real time what he was Googling? That would be amazing. That would be so interesting. Just to see what goes on in that guy's head, what kind of stuff he's looking at, how weird it gets. Anybody else? Just me? Cool. That's what I thought. But I would love to know, like, what's Jeff Bezos tracker? Like, what's he doing right now? So you get a quick look, quick, like one sentence text or something, just so you know what's going on. That'd be amazing. All right, I'm going to knock through one or two more, and then we going to get on with it, baby. That was a good one, Jay. I hope you took that on the 119 break. I know you're in Pennybois, so I know you had access. Elon's still getting tracked by that kid, that flight tracker. That's awesome. Didn't he offer him an egregious amount of money to stop tracking him? But the kid was like, "No, thanks. I'm good." Tracks his jet. I do hope though that I could see that why it's a safety. It was, I mean, dude, somebody's texting everyone and telling them on Twitter, whatever, every time you leave your house, that would kind of freak me out too, if I'm being honest. So Target looks pretty abysmal. So, oh, we accidentally moved that line, so we're just gonna have to live with it. Remember, we took this trade at about 121, 122, and then it pumped to about 135, nice 10%. We're talking about how if it holds over and doesn't create that new low, which it did right here, that we're going to hold and hope on these shares. Just kidding. We're not holding and hoping. It's a very calculated trade. We love this 120s area, and we need this to hold because our bottom dollar support would be 108, 109. But what we're thinking here is that this top of range from back in time right here, this top of range right here from back in 2019 would function as our support and pivot point. So as long as we stayed above 120, we should be golden. We're not seeing that price action on target. Looks like earnings readout was not great. So sellers came in and took us for a ride. Volume is coming in a little thicker than usual, but it is to the sell side. So we really just need to see that 120 support hold. Well, as I'm already in this one, I'm telling you right now, Sensual with risk. I'm still smashing. I'm taking that calculated return here into consideration. I did sell like 30% when we were up about 10%. So I did close some out and I was planning on buying more. I just haven't gotten around to it. But we really just need to see that 120 bottom hold. As long as we don't violate that low, we should be good to go. So mm, 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 mm. Target, let's do one more. Oh, of course, I'll look at AMC. I'll always look at AMC. Oh my God, I gotta like stretch this chart so much just to see anything. That's how you know you're getting screwed. I don't know if anybody follows my Twitter, but if you don't, you absolutely should because I've been not, I wouldn't call it trolling that Adam, what's his name guy, but kind of. I've been following all the stuff he does because he's just an absolute filthy scam artist. So put my Twitter on there if you want to follow it and follow all the shit I talk about AMC and that guy who's just a terrible human being and just basically not even defrauding his investors. He's basically telling them, "Hey, I'm going to kill you, and I'm going to take all your money." And they're like, "Oh, cool, man. We really believe in you. I hope Barbie sells out." So that's what's happening there. Um, Abysmal stock price here. We're back down to about $7. I don't even know what the split adjusted price would be at this point. I mean, you're talking cents on the dollar after the amount of dilution these people have gone through. There needs to be a support group for this. Luckily, there's Pennybois, which I realize that's kind of what we should do. So we should have like an AMC grief support group because I feel terrible for these people that really bought the bag of goods this guy was selling and got destroyed. So I'm gonna tell you right now, it's a pass because it's AMC. Doesn't matter what the technicals are. Doesn't matter if it's holding up. It is the most untrustworthy stock chart you can ever look at, in my opinion. Maybe they've been right the whole time, and there are all these weird invisible shares or whatever they're talking about. I don't know, and I really don't care. What I do know is that I can't leverage any kind of edge trading this, so I'm not going to touch it. So for all of you that have been harmed by AMC, please file a class action lawsuit. And in the meantime, I'll put the link one more time to the Discord. Message me. I'm Big Quench on here. I will happily make it worth your while. I'll knock your membership cost down massively. And hook you up with a deal if you got destroyed by AMC because I feel for you. You're going to go through the full trading education course. You're going to get alerts and live access to all of us so that you'll know next time not to buy into AMC. I put the link in there and agreed with Mike. The guy's got two first names. That should tell you right there that you can't trust him. It just doesn't make any sense. Also, it's in his best interest to screw you. He could have done something cool, but he chose not to. And that's a sad reality of people that are trying to make this. I think COVID really opened the door to retail in a way that only an event like that could have. And I think that I'm so grateful that happened for me, because the opportunities it created to like basically create this and trade with all of you guys, and the money we made in COVID was just absolutely ridiculous. So it was a huge opportunity for a lot of people to get exposure into a market that they had no exposure in, and to really learn how to make money consistently over time. And unfortunately, that was taken advantage of by not only people that run scummy businesses, but also like companies that abuse the people that follow them and take advantage of them and take them for a ride. And it's sad to see. So if you were harmed in the violence that was AMC, please reach out. I'm happy to help you figure out your trading, figure out your positions, whatever. I just don't want to see you get beat to death anymore. I mean, we literally alerted AMC at like $2.70. I alerted the sell publicly. It's on their Facebook. You can go verify this at $77. AMC went as high as $77.30. I'd said $77 on AMC. I'm out. I'm done. I called that exit live. It's on our Facebook page. Go there, verify it for yourself. You don't have to trust me with anything. It's there, because I saw the sell side volume just boom, just growing. And I knew we were up thousands of percent. There's no reason to be that greedy and continue to hold it. The mission is great and cool and awesome. But at the end of the day, if you have no money and no capital and no real ability to improve your position in life, the mission means nothing. The mission was the lie that they used to abuse you and take what you have. Everyone has an agenda. And if my agenda was hundreds of millions of dollars in stock options for a company, and you think that I'm going to continue to lead you to the promised land, you are sadly mistaken, my friends. That's why I love what we do. Your success, our success, my success, your success are interdependent, right? If I'm not trading well, I'm losing money. If I'm not trading well, you're probably losing money, right? And you're not going to stay with us. If I'm trading well, you're making money. You're going to stay with us. We win, right? Everybody wins. Mutually aligned incentives. It works. But unfortunately, in that case, you know, when you have hundreds of millions of dollars in stock you need to peel out of, you need to raise that price and get buyers to come to the market to pick up your shares. And that's exactly what he did. And to be honest, he's pretty straightforward about it in the filings and everything else. It's just this sad nature of it is that, you know, people don't know how to read filings, and that's why you should come follow us, because we read them and interpret them for you, so you're never confused. So anyway, I love y'all. That was jam-packed. Make sure you save this video. If you liked it, hit a thumbs up. We greatly appreciate the support. It lets us know that we're doing something that you value and that you're getting something from it. Again, I love y'all, and stay blessed now.